It was a Tuesday morning. I was up 3% for the week. 3 solid days of disciplined trading, following my rules, taking profits at my targets, cutting losses quickly. Everything was going exactly as planned. I felt good, maybe too good. That's when I saw it, a setup on Euro USD that looked absolutely perfect, the kind of setup that makes your heart beat a little faster. Clean support level, bullish momentum building, everything aligned. But here's the thing, it wasn't part of my plan for the day. I'd already hit my daily target. My rules said I was done. But I took it anyway. That one decision, that one moment of letting my emotions override my discipline, set off a chain reaction that would wipe out my entire week's profits in less than 6 hours. And the worst part? The trade itself wasn't even the real problem. What happened after was where everything fell apart. If you've ever had a winning week turn into a disaster because of one emotional decision, this story is going to hit close to home. Because what I'm about to share isn't just about losing money. It's about how one emotional trade can trigger a psychological spiral that's almost impossible to stop once it starts. See, most traders think the danger is in the bad trade itself, but that's not true. The real danger is in how that one trade changes the way you think, the way you feel, and the way you make every decision that comes after it. One emotional trade doesn't just cost you money, it costs you your clarity, your confidence, and your ability to execute your strategy. I'm going to walk you through exactly what happened. Not just the trades I took, but what was going on in my head at each step. The thoughts, the feelings, the rationalizations. Because understanding the psychology is the only way to make sure this never happens to you. Let me paint the picture for you. Monday was a great day. 2 trades, both winners, up 1.2%. Tuesday morning, another winner, up 0.8%. Wednesday, I was patient, waited for my setups, closed out up 1%. By Thursday morning, I was sitting at 3% for the week with 1 day left to go. This is where most traders start getting dangerous thoughts. I remember sitting at my desk thinking about how close I was to a 4% week. If I could just squeeze out 1 more percent, it would be one of my best weeks of the month. That thought right there, that desire for more when I already had enough, that's where the emotional door cracked open. The Euro USD setup appeared around 10 a.m. It really did look good, but my plan for Thursday was to trade GBP USD during the London session, and that window had already closed. I had no business looking at Euro at that time. But I was bored, I was feeling confident, and I was thinking about that 4% target. I convinced myself this was just being flexible, just adapting to market conditions. But deep down, I knew the truth. This wasn't strategy. This was ego. This was greed. This was me wanting to feel like a genius for spotting an opportunity others might miss. I took the trade with my standard position size, watched it move in my favor initially, felt that rush of validation. See, I was right. My instincts were on point. The market was rewarding my decision to take the trade. Then it reversed. Not dramatically at first, just a small pullback, nothing unusual. My stop loss was still far away. I had room. This was normal price action. But something had already changed inside me. I wasn't trading my system anymore. I was protecting my ego. And that's when everything started to unravel. The trade hit my stop loss about 30 minutes after I entered. A clean loss, exactly what should happen when a setup doesn't work out. My loss was 0.5%, which still left me up 2.5% for the week, a totally acceptable outcome. Any rational trader would have closed their platform and walked away happy. I didn't do that. Instead, I sat there staring at the chart, and I felt something I hadn't felt all week. Anger. Not just disappointment, actual anger. How could I have been wrong? The setup was perfect. The entry was clean. It should have worked. Notice what was happening here. I wasn't analyzing what went wrong with the trade. I was taking it personally. The market hadn't just invalidated a setup, it had invalidated me. And that shift from objective analysis to personal offense, that's the moment everything changed. I told myself I just needed to understand what happened, so I kept watching Euro USD. I wasn't planning to trade it again, I was just studying it, learning from my mistake. At least, that's what I told myself. But really, I was waiting for the market to prove me right, waiting for price to show me that my original analysis was correct and I just had bad timing, waiting for a chance to get back what I'd lost. About 20 minutes later, Euro USD started moving back up. See, there was the move I'd anticipated. I wasn't wrong, I was just early. This is a common lie traders tell themselves, and I fell for it completely. I took another trade, same direction, bigger position size. Why bigger? Because I'd already lost once, so I needed to make it back faster. This is where the logic part of my brain had completely shut off and the emotional part had taken over. I didn't even recognize what I was doing. This second trade moved against me almost immediately, but now I was in a different psychological state. I wasn't going to let the market beat me twice, so instead of taking the loss, I moved my stop loss further away. I gave it more room to breathe. That's how I justified it, room to breathe. The trade kept going against me. My 2.5% weekly profit was now down to 1.8%. I was still up for the week, but I'd given back more than half my gains on 2 emotional trades in less than an hour. A rational person would have stopped right there, but I wasn't rational anymore. I was in a state that psychologists call loss aversion. The pain of losing feels about twice as intense as the pleasure of winning. My brain was screaming at me to do something, anything to avoid accepting this loss. So I did what desperate traders do. I averaged down. I took a third position at what I thought was a better price, telling myself this would lower my average entry and make it easier to get out break even. Now I had 3 times my normal risk in a trade that had already proven me wrong twice, and I was completely trapped, not by the market, by my own emotions. The position was too big to let run against me much further, but I couldn't accept the loss because it would wipe out most of my weekly gains. I sat there watching every tick, my heart pounding, my palms sweating, my mind racing through scenarios. If it just bounces here, I can get out flat. If it moves another 10 pips against me, I'll have to cut it and take a massive loss. Maybe I should add another position to average down even more. This is what one emotional trade does to your psychology. It doesn't just cost you the money from that trade. It turns you into a completely different trader. Every decision becomes about emotion rather than strategy. Every tick of the chart affects your heart rate. You're not trading anymore. You're surviving. The market didn't care about my stress or my hopes or my increasingly desperate bargaining. It kept moving against me. Watching my weekly profits evaporate in real time was excruciating, but what was worse was knowing that I was doing this to myself. Every trader has a moment in situations like this where they know they should cut the loss. For me, that moment came when my weekly gains dropped below 1%. A voice in my head said very clearly, "Get out now. Take the loss. You're still up for the week. Walk away." I ignored that voice. Instead, I did mental gymnastics. If I close this now, I'm accepting defeat. But if I hold just a little longer, maybe it reverses. I've seen trades come back before. Why not this one? Plus, if I close it now, the whole week feels wasted. At least if I hold it, there's a chance. This is what's called the sunk cost fallacy. I'd already invested so much, emotional energy, time, money, that cutting the loss felt like admitting all of that was for nothing. So I held on, hoping the market would save me from myself. It didn't. By early afternoon, I was down 1.2% for the week. A week that had started with 3 days of perfect trading was now negative. And it all happened because of one setup I had no business taking and the emotional spiral that followed. The final crushing blow came when I finally did close the position. Not because I made a rational decision, but because I couldn't psychologically handle watching it anymore. I was exhausted, defeated. I clicked the close button and just sat there staring at the screen. The losses themselves were painful, but they weren't the worst part. The worst part was the realization of what I'd become in those few hours. I'd violated every rule I had.
I'd traded emotionally, oversized my positions, averaged down on losing trades, moved my stops, held positions out of hope rather than analysis. I'd become the exact type of trader I'd always told myself I would never be. And it all started with one trade that felt right in the moment, but was completely wrong for my plan. After I closed everything, I tried to figure out where it went wrong. The obvious answer was the first Euro-USD trade. If I'd just stuck to my plan and not taken that trade, the whole disaster would have been avoided. But the more I thought about it, the more I realized the problem started even earlier. The problem started when I began thinking about that 4% target, when I started wanting more instead of being satisfied with what I had, when I let my ego get involved in my trading. The Euro-USD trade was just the symptom. The disease was emotional trading, and it had been lurking under the surface even during my winning days. Sitting there with a negative week after being up 3%, I had a choice. I could beat myself up, feel sorry for myself, maybe even revenge trade to try to make it back. Or I could treat this as the expensive education it was and actually learn something. I chose to learn, and what I discovered about emotional trading that day has probably saved me from making the same mistakes dozens of times since then. First lesson: emotional trades don't announce themselves. They don't come with a warning label that says, "Hey, you're about to make a terrible decision driven by ego and greed." They disguise themselves as opportunities, as flexibility, as good trading instincts. The way to catch them is to have absolutely clear rules about when you trade and when you don't. Not guidelines, not suggestions, hard rules. If it's not in your plan for the day, you don't take it. Period. No exceptions for setups that look really good. No exceptions for when you're feeling confident. No exceptions. Second lesson: the first loss is always the cheapest. This is something experienced traders say all the time, but you don't really understand it until you've lived through a spiral like this. That first Euro-USD trade that stopped out cost me 0.5%. If I'd accepted that loss and walked away, I'd have been up 2.5% for the week and had a story about good risk management. Instead, trying to avoid that small loss turned it into a 4.2% drawdown from my weekly high. The refusal to accept the first loss made everything exponentially worse. Now I understand viscerally that when a trade is wrong, the smartest thing you can do is accept it immediately. The market is telling you something. Listen. Third lesson: position sizing is your psychological safety net. One of the reasons that first loss hurt so much emotionally was because I cared too much about it. And I cared too much about it partly because of the position size. When you're trading size that makes your heart race when it moves against you, you're trading too big. I realized that if my standard position size created that much emotional reaction, I needed to trade smaller. Not because I can't afford the losses financially, but because I can't afford them psychologically. Trading smaller doesn't mean making less money. It means making better decisions. And better decisions compound over time. Fourth lesson: understand your emotional triggers. For me, the trigger that day was being close to a really good weekly return and wanting to push it even higher. That desire for more opened the door to emotional trading. Now I watch for that feeling. When I start thinking about how much more I could make, that's a red flag that I'm shifting from process-focused to outcome-focused. Your triggers might be different. Maybe it's losing trades that make you want to prove yourself. Maybe it's boredom. Maybe it's comparison to other traders. Whatever it is, you need to identify it and have a plan for when it shows up. Fifth lesson: have a circuit breaker. After this experience, I implemented a hard rule. If I give back more than half of my unrealized weekly profits, I'm done for the week. No matter what, no exceptions. This forces me to protect gains and prevents the exact spiral I experienced. Your circuit breaker might be different. Maybe it's 2 losses in a row. Maybe it's 1 trade outside your plan. Whatever it is, decide in advance and stick to it absolutely. Here's what that one emotional trade really cost me. Yes, I lost money. The actual dollar amount hurt, But I've had losing weeks before, and I'll have them again. That's trading. But the real cost was something much more valuable than money. It cost me confidence. For weeks after this happened, I second-guessed every decision. Was this trade part of my plan, or was I being emotional again? Was I following my strategy or fooling myself? That doubt is poisonous for a trader because you need to be able to trust yourself to execute. It cost me time, not just the hours I spent in those losing trades, but the days afterward replaying it in my head, analyzing what went wrong, rebuilding my psychological foundation. Time I could have spent improving my strategy or enjoying my life. It cost me energy. The emotional exhaustion from that day lingered. I felt drained, not just tired, but deeply depleted. This affected my relationships, my health, my overall well-being. Trading isn't supposed to destroy you, but emotional trading absolutely can. Most importantly, it nearly cost me my love for trading. In the days that followed, I questioned whether I even wanted to do this anymore. If I couldn't control my emotions better than that, maybe I wasn't cut out for trading. That's how close one emotional spiral came to ending something I'd worked years to build. But here's the thing about failures like this. They're only truly costly if you don't learn from them. If you make the same mistake twice, that's on you. But if you take the lesson, internalize it, and let it make you better, then it becomes an investment rather than a loss. 6 months after this happened, I had another week where I was up nicely and saw a trade outside my plan that looked perfect. Same situation, same temptation. But this time, I recognized what was happening. I remembered that Tuesday morning and everything that followed, and I closed my platform and walked away. That moment of choosing discipline over emotion felt better than any winning trade I've ever taken, because I knew I'd actually learned something. I'd changed. The expensive lesson had paid off. Now, I want to be clear about something. I'm not sharing this story because I've figured it all out. I still make mistakes. I still have emotional moments. The difference is that now I catch them faster, and the consequences are smaller. I'm not perfect, but I'm better, and that's all any of us can ask of ourselves. If you've experienced something similar, if you've watched a good week turn bad because of emotional trading, I want you to know you're not alone. This happens to almost every trader at some point. The question isn't whether you'll face this challenge, it's whether you'll learn from it when you do. Trading is as much about psychology as it is about charts and analysis, maybe more. You can have the best strategy in the world, but if you can't manage your emotions, you'll still lose. That's just the reality of this business. So here's my challenge to you. Look at your recent trading honestly. Have you taken trades outside your plan? Have you let emotions drive decisions? Have you experienced many versions of the spiral I went through? If so, don't beat yourself up, but don't ignore it either. Write down your rules. Real, specific, and forcible rules about when you trade and when you don't. Identify your emotional triggers. Set up your circuit breakers. Do the work now before an emotional trade costs you more than you're willing to pay. And if this story resonated with you, do me a favor. Hit that like button and subscribe to the channel. Not for me, but because it tells me this kind of honest, real content about trading psychology is valuable to you. I share these experiences, the wins and the losses, because I believe we all get better together. Drop a comment and tell me about a time when an emotional trade cost you. Let's learn from each other. Trading can be isolating, but it doesn't have to be. We're all fighting the same psychological battles. Thanks for watching. Protect your capital, but more importantly, protect your psychology, because in the long run, that's what determines whether you make it in this business or not. I'll see you in the next one.